So it's like pre-qual is like filling out the Tinder profile. And the pre-approval is actually going on the date and being like, oh, this is what I'm working with.
Yes.
Hello, everybody. I'm here with Kimberly Burns.
Hey guys, how are you? I'm with Benchmark Mortgage here locally in Austin, Texas. I'm excited to be able to be with Fernando and create some fun content for y'all.
Okay, I'm excited. Thank you so much for doing this. We're just here talking about mortgages 101. You know, there are a lot of questions that a lot of people may be too afraid to ask. Buying a home is a huge thing that not a lot of people, have the courage to do, especially in this market, because they're intimidated by insurance rates, by time it takes to close, by asking price, by things that are out of their control. But there are things they can control, and that is finding an amazing loan officer to help walk them through the entire process. That being said, we'll jump right into it. Kimberly, what is, in a nutshell, the process from going from applying for a mortgage to actually getting to the closing table?
That's a great question. So we can take this multiple ways. The biggest piece is if you are already working with a realtor, typically there's a relationship between realtor and lender. And so one of the first things you need to do so you're not out there flying blind is find out what your purchase power is. You've got to know that, right? And one of the things you do in order to do that is get pre-approved. Pre-quals are great. There is a distinction between
I was
those.
going to ask you, because there's a huge difference. People
Yes.
throw around pre-qual and pre-approval like they're the same thing, and they're not the same thing.
They're not. And especially here in our market, a pre-qual is anybody can say anything on an application.
Yeah.
Right? So, and the way we determine income, maybe even looking at employment history, all those things, someone can say anything, and it's just what they have written down on the application. And a system can be run to get a pre-qual. You can just overlook it.
So it's like pre-qual is like filling out the Tinder profile. And the pre-approval is actually going on the date and being like, oh, this is what I'm working with.
Yes, so
Okay.
consider like the pre-approval is the more in-depth way of finding out everything, right?
Okay.
So a pre-approval, the lender will take extra steps to ensure that they are viable and able to be potentially approved. Deeper dive into your income, deeper dive into your employment, assets, right? AKA the money you have to have. And good lenders will do a conversation, I call it a discovery call, prior to going into the pre-approval, which is kind of like a verbal pre-qual, and ask a series of questions that helps the buyer start to feel comfortable about the process, even before we dive into making sure we're fully pre-approved, while asking all the documents that are going to be needed.
Yeah, so for a pre-qual, I mean, I'm very old school in the sense where it's like, I like to go into an office and talk with somebody. Is that something that you offer as well, like a physical, like a first meet, or do they call, or do they go online, to, benchmark, is it benchmark.com or benchmark.us?
It's US.
Yeah, benchmark.us. And do they just fill out a form and then wait for to be contacted? Like, what does that process with you look like starting off?
Yeah, perfect. So the best, easiest way is that if they already have a realtor like yourself, generally an introduction is made between me and your client.
And they don't need a realtor to see you?
They don't. It
Okay.
can go one of two ways. And in fact, sometimes I would actually encourage people when they start thinking that this could be an option, it could be very powerful to actually talk to a lender prior to maybe even getting their realtor, because lenders work with a plethora of realtors, and the lender may be able to actually find a fit for you, much like how realtors find the fit for their clients.
Yeah.
And so there is no right, wrong way to go about it. Just know you have options. You can go through your realtor who will introduce you to a lender, and vice versa. You can take the step of reaching out to a lender. And to answer your question about facing, front facing, sure, absolutely. If that was what was best for you, I do a virtual discovery call, which sometimes not everybody can actually come physically to the office anymore, and we have the convenience of Teams and Zoom. So I set up that discovery call. It's actually a first-time meet-to-meet.
Okay, cool.
Right, where we're going over the process and actually talking about basically the whole application prior to actually really doing the application. So that's kind of like a verbal pre-qual in a sense.
Okay, and so for, once they get through the pre-qual where they pretty much told you what they can bring to the table in terms of, wanting to buy a home, then what are the actual, physical things that they need to show you?
Great.
The tangible things they need to show you to get to that pre-approval stage.
Yeah, great. So now we've met, now we're gonna apply. Once you've applied, Everything will go into a data system or into my, software system, and then we will trigger. You'll hear words like we trigger documents, and those documents typically consist of 30 days worth of pay stubs.
Okay.
Okay. 60 days of bank statements to show your assets.
Checkings and savings.
Typically, yes,
Okay.
and or where the funds are coming from for the purchase of the home, right? And then we're going to want your 2 years W-2 statements, right? So that we can see that. 2 years of tax returns.
Okay.
Okay, so that's actually important as well.
That's a lot. It's getting hot in here.
And then
A lot of
generally,
paperwork. Okay.
your driver's license, which needs to be up to date.
Okay, up-to-date driver's license. That's something
Correct.
that you wouldn't naturally think that you need to apply for a loan.
Correct. And you can get away with a passport too. So in the event that you did not have your driver's license, you could certainly use a passport as a form of identification.
Now, when I was applying for my loan, it was a very special case because being in entertainment, we don't work long-term contract jobs unless you're very, very lucky. But when I was applying for my loan, I had to show proof that I had worked 2 years into the future. Is that something that is, specific to cases, or do people have to show like, oh, you will have employment for the next 2 years to show that you can potentially pay off a mortgage that you're going to take on at that time?
Good question. And see, this is really good what he's explaining. This actually gets uncovered in the discovery call to ensure that you know what's going to be needed. Okay. Right? So you're like a 1099 essentially is what I'm kind of hearing.
No, so actors are very specific. They're treated like independent contractors, like 1099, but we are W-2'd. Because all of our money gets funneled to production companies, and the production companies will write our checks. And granted, we don't get checks every single month or every single, 2 months, 3 months, but we do get them from W-2 because we pay into Social Security, we pay into unemployment benefits and everything like that. So we work like independent contractors, but in the paperwork, we are W-2'd.
Heard. So interesting that you brought up, there's ways to navigate that, right? And so what I really want your viewers to get is like, even though it is not your traditionary W-2 salary position, don't let that stop you.
Yeah.
Right? Like we'll find a solution or we'll have a conversation to navigate the plan and the action steps so that you can feel comfortable moving forward, right? Although your income may not be that hourly or biweekly or weekly, right? Like don't let that stop you is the biggest thing I would say. It's just something we have to uncover to find the right path.
And how important is their credit?
Yeah, great question. So, this becomes a big stopping point for people because there is a lot of myths, much like down payment. We can get to that shortly.
Yeah.
Right? Typically, if you're going with a governmental loan or a government loan, such as FHA, USDA, and or a VA loan,
which we'll get into in other.
Yeah, those are all other.
That's a whole other episode. It's a whole other interview, but we'll get into that later. But
yeah, so we like to share with you that typically you want to have a 620 and above is typically what we're looking for.
Okay.
Doesn't mean we can't do anything below that, especially with government loans, but then there's a different caveat and a different way we have to structure that loan, and it comes through your down payment.
Yeah, I was going to say, it might require a higher down payment if you have,
That's exactly right. So we like to share with people 620 and above is where you need to be, and people will handcuff themselves. And again, I would share with your viewers, our potential clients, like look to not do that until you actually get the full story and talk to someone, because I've talked to numerous buyers who get frustrated that they're at a 665 and think they can't buy a home. That is, that's a myth. There are ways that we can navigate an area and or create a plan so that you understand that is possible. In the event you don't meet the 620, right? One of the things that I love to help Fernando and his clients with, mine as well, is we just need to get an action step and action plan. And I have a credit specialist that I work with hand in hand who can help put us on course to get that score up appropriately and the right way.
But there are also things you can do to shoot yourself in the foot that you should not do prior to thinking about applying for a loan, and also when you're in the process between pre-qual, between pre-approval, and between the closing table, what you should not do. What are things you should not, it's very much not do if you're thinking about buying a home or in the process of getting that pre-approval or that approval for the closing table?
Yeah, we call those the do's and don'ts, right?
Yeah.
Of either as you're thinking about buying a home, we would tell you, number one, take out no big loans.
Okay.
right? So no big installments, AKA let's not go buy a car, let's not go buy a boat. And
Wait till after you close.
Yeah,
Wait till
keys
after
in
you
hand,
close.
baby. Keys
Yes.
in hand first, right? So no big purchases is what I would say. No installment loans, right? Like don't go grab a loan. This is a misconception sometimes. People think, well, I need money for a down payment. I'm going to go get money from my bank as a loan, and I'm going to use that towards a down payment.
Get it from
Right?
family.
Yes,
If you can,
right? Like
get it from family.
This is why we have that discovery call to kind of really uncover ways to help you navigate the down payment situation. So big don'ts, no big purchases. We tell you don't offer to loan people or be a co-signer for family members, right?
Don't buy the furniture for the home and
Don't
put
do
it
that.
on, no interest credit card, because then that's an extra liability that you're paying per month that is going to count against the amount of money that should be going towards your mortgage.
That's right. That's exactly right. So I always share with people those big ticket items, wait till keys are in hand. And then, or you'll have a great realtor who's going to negotiate some really
Yes,
good stuff,
sure.
like your washer and dryer, things of that nature, your fridge.
Closing costs.
Yes, all of those good things. Things that I always share with people too is we always talk about the don'ts, right? But then there are some do's that are really important. Be timely with your lender and your realtor in your communication. Whether you're on contract or you're actively looking, in contract or you're actively looking. I tell people, take this on the first I would say the first 2 weeks is like having a full-time job. There's a ton of communication that's going back and forth between realtor, lender, title company. So we say, although there's don'ts, we do say there are do's, and those do's is be important inside of your communication so that you can feel safe and secure and answering timely as well while you're under contract and actively shopping.
And keep in mind that when you meet with a realtor and also with, a mortgage lender, it becomes a very invasive process. Like you divulge information about your finances and about your personal situation that are going to affect you being able to afford that house or get that loan. Do not be embarrassed. This is not something where you need to hide a certain debt or, a certain payment that you make or that you need, or if you've got an unemployment insurance, things like that. If you're getting alimony, if it's going towards the actual payment of the home, these are not things that you should hide, because these are things that are going to help or hurt you when they are discovered in the future and you did not mention them in any initial meeting.
So another do disclose everything you can about your financial profile.
Yeah.
That's huge, right? Because it will show up. There's so many checks and balances these days inside of lending that we just don't want any snakes in the grass.
Yeah.
And that goes back to, again, you'll hear me say this, I ask a lot of questions in that very preliminary discovery call to help make sure that we don't have any holes in the process that could come back and have to be addressed.
Yeah. We've gone over having full disclosure when you're meeting with your lender and with your realtor. We're past the option period.
Okay.
So the appraisal came back. We'll talk about getting an appraisal that comes back that's not desirable later. So the appraisal came back all right. So now let's say, you wanted to buy a home at 350. The appraisal came back at 350. So everything's looking good.
Yep.
So now what is the job of the home buyer between the closing of the option period and working to that closing table?
Yeah, that's great. So now we're under contract is what your scenario is. We've gone through option, you've negotiated, and we're now moving forward. So as soon as we know that we have probably as a lender already started working in the background, even while you were in an option period, asking for additional documentation that may be needed and so forth. Once that appraisal has come in and it's made value, we are then going to be put into our underwriter to have their eyes fully looked at the file to get an approval on property specific.
And what is an
Right.
underwriter?
Yeah, that's a good one. So an underwriter is like
Sounds like
I
an
don't-
undertaker. Something that's
well,
very
consider they can kind of sometimes be
they're
like
very
that.
secretive and scary. What is
Right.
an underwriter and what is a loan officer? The difference.
Yeah, that's great. So you have loan officer who actually generates the business and does all the educating, right? And then I have a very small team. I have a production partner who introduces themselves very early, and they're the ones who do all the going through the documents and getting them from the client, right? They're like my concierge service of my client. And then after we have all the things that we need, we go from there, we go into processing. And processing is, you can now see, not only have my eyes been on the loan, my junior production partner's eyes have been on the loan, now it goes to processing, and they go and look at all of the things that have also been turned in. Okay. From processing, they're looking to make sure there's no holes, no things that have been missed. They run certain things in the background like fraud guard and other things that ensure that you are lendable. And then we get it passed to the underwriter. The underwriter is the end all be all.
Yep.
They are the ones that look at your financial profile. They go through everything and scour it to ensure that if my eyes miss something, if my production partner's eyes miss something, or the
My underwriter was very generous because for me to buy a home, my underwriter was very, very generous. But it was during COVID, so there was a lot going on.
There
I'm
was
sure.
a lot
There
going
was a lot
on.
going on.
But they are kind of the end all be all of whether or not the file is lendable, right? And so generally they'll go through it and they'll see a few things that might be needed, right? And then they'll come back and we'll get our approval, and then now we'll be looking at what's left over. These are called conditions to the loan. That means the underwriter has viewed it and they see some additional things that they need from the borrower, okay, to complete the process.
Yeah.
And so we will get our initial approval with a few conditions. The borrower then goes through and honors all those conditions. Things that could pop up, people are like, what are conditions? Things that we'll need. You may not have solidified your home insurance yet, right?
Which you have to get done before you get the keys. Like it has to be set up so that like when you move in, you know, August 1st, that home insurance takes place or starts on August 1st.
100%.
Yeah.
Right? So there could be that, or maybe we're getting a gift, and a gift letter needs to be signed by your parents or the uncle who's providing the gift, right?
Yeah.
It can be a various of
And the
a
gift
variety
is
of things.
any kind of monetary help they give you towards a down payment or whatever. That's the gift they're talking about, that they have to have it approved in a letter saying that, you know, it's given by a family member
That's
or
right.
such.
That's right. And so, you know, those are the kind of things that could come into what's called conditions or during that approval process. Once you have then your appraisal set and you made value, you've turned in, as the borrower or the buyer, have turned in all the conditions after being conditionally approved. We then take the file and we go back into underwriting for what everybody's favorite quote is, clear to close.
Yes, that's a wonderful, clear to close is beautiful.
Yes.
It's an amazing thing you want to hear.
Yes.
And so that takes us to essentially, you know, signing the paperwork.
Correct. So what happens as soon as you get your clear to close is it then lets the title company and the lender's closer, right? We have people who go through the financial funds and they begin to balance the numbers at the end.
Yeah, and the title company, for a brief overview, is they're the ones who make sure that, you know, the home is coming free and clear, so that the person who owns the home legitimately owns the home and is selling it to you, so you then take possession and, you know, take the deed to the home. And there's not going to be somebody coming out of the woodwork that says, oh, that's actually my house and that was my ex-wife who didn't clear it with me. Like, no, like the title company makes sure that once that home is under your name, it is yours and nobody else but, you know, the bank can take it away.
That's accurate, right? If you don't pay, you don't stay is what they'll tell you at the closing table. So thank you for kind of doing that. So the title company and closer then begin balancing the final numbers for your cash, your final cash to close. And that can take anywhere between, depending on how quickly it is, you know, 24 to 48 hours.
Yeah.
Once they have balanced, both parties have balanced, you then have your final cash to close, and that's what you will bring to the title. You typically will wire it, or you can get a cashier's check. And if you're going to do a cashier's check, because a lot of people understand that wire fraud is real.
Yeah, wire fraud is rampant.
Right?
Yeah.
And
That's
we
why we
talk
send
about
you
it.
wire fraud warnings when we sign you as a
Yes.
client, just to make sure that you're aware that stuff's going on, and you have to keep an extra eye out for people who, you know, because there are people who, they know that you're applying for a loan, or they know that you're in the process of closing on a home, and they send you a message that looks like it's from your bank or looks like it's from your lender saying, oh, you need to send this much money for, you know, for the deal to go through, and you do that and you're out several tens of thousands of dollars
Yes.
because, you know, you were taken, essentially.
Correct. And so there's a lot of coaching that goes in on, you know, whichever is comfortable. You have two forms of being able to do that, by wiring, and or if you're going to do a cashier's check through your bank, then we typically tell you, hey, you might want to do that ahead of time. Let's say you're
Yes.
closing on a Wednesday. You're going to probably want to go get that cashier's check on Friday and deliver it to the title company by Monday, so they can verify the funds, so that when you're sitting at closing on a Wednesday, our wire is the lender is already there, and then your money is already there from your cashier's check. And then it's a very seamless process, and keys are in your hand.
Yeah, you don't want to do any of this stuff on a weekend, because you're relying on the bank to be open, and then you
That's
get
right.
those funds, and then you're panicking, and then it's Monday already. Like, you want to have plenty of days in advance to do all these things so that you can enjoy sitting at the table, signing the papers, hopefully with your realtor, sometimes with your lender.
Always with your lender. I
Always
make
with your
all
lender.
my closings.
Okay, so always. Okay, so she's that kind of lender.
Yep, I'm there.
And everybody celebrates. Everybody takes a photo, pops the champagne or the cider, whatever you're into.
Cider for me.
Yes. And now, of course, one thing that I do want to make people aware of is you have the right to shop as many lenders and loan officers as you want to, right? And it'll only ding your credit one time, a hard pull, if you do it within a certain period, 30 to 45 days?
I believe it's 45.
45? Okay. So you can, you can meet with Kim. You can meet with a number of other lenders and find out that him is the one you want to go with, and that's fine. You're allowed to shop around. You're allowed to swipe left on many other people, then you swipe right on the right one, and then you go ahead and you meet with them, and you don't have to worry about your credit being pulled so many times. So don't be afraid to shop around and find the lender that not only fits your financial situation but also fits the way that you like to work, because it's all about relationships. Like, any realtor can write a contract, for a house, right? Or to buy and sell a house. But it's the realtor who you want to work with who fits your style of doing business and your personality. And it's the same thing with lenders. You don't want to go with somebody who's completely, makes a situation where you don't want to open up and be honest about your finances and honest about your situation, because that doesn't help anybody in the process.
Right. Yeah. And just to kind of piggyback on that's why, meeting your lender is incredibly important, right? It's important that you can hear tonation, that you can share freely in the questions that are asked, versus some lenders will just throw you an application and not really even know your picture, right? So, it goes back to, what is important to you? Is relational capacity important to you? That is huge to me, right? Because this is the most important purchase of some of y'all's very first life, right? Of the first time ever. And there's something to be said for someone who is empathetic, who is communicative, who is effective in their communication. So, when you are interviewing, look before, see who the fit is that fits coincidingly with what you want.
Yeah.
Right? So thanks for actually kind of pointing all that piece out. That's actually really important.
Yeah, and it's a big reason why I'm here talking with Kim, because her business style, and just her personality and how she works with clients fits the way that I like to work with clients and the way that I like to speak and do business. So that's you'll see, that's why you have realtors who have their team of go-to vendors, title people, home insurance people, lenders, because they work well together and they know that they'll get the job done adequately for the client, which is you.
Yeah, 100%.
Yeah.
I like to just plug this small thing too. Hopefully what you're taking from all of this, or what I hope you're gaining, is I have an education background. I was a teacher for 24 years and a coach.
Explains the hands.
So
Explains the hands.
yeah, that, or more importantly, right, the step-by-step piece to how this all works, and walking you through the opportunity to feel that you understand what your money's doing for you, right? We're actually creating an opportunity for you to gain wealth through real estate. And you may hear that as cliche from time to time, but it actually really is an important piece.
There's a reason why corporations buy up, subdivisions, and why they buy up housing.
Accurate. And so finding someone, if education is important to you, again, it goes back to make your list of what you're looking for and see who the right fit is.
And I think that's a great way to, close up this section. Thank you so much. We'll do some more videos. I'll do more videos with Kim. There are some other lenders that, of course, you want to have a team of people that you can, share depending on personality types. We'll talk about the types of loans there are out there, what concessions are, things like that might seem foreign to you, but one or two YouTube videos and you can be in a position to talk to somebody what you're talking about.
Yes, 100%.
Yeah. So again, how can they reach out to you if they want to potentially go forward with getting a loan approval or pre-qualification?
100%. So the first thing I would say is reach out to your realtor partner.
Oh, look at that!
Right?
Look at that!
That's
See,
how
I
that
didn't even
works.
prompt her. I didn't even
Right?
prompt her. Yeah.
So,
Only I have her number. Nobody can contact her but me. Always through me.
And then he can either intro us by group text, or if you're just watching this individually, I'm at kym.burns@benchmark.us.
Okay.
And I'm happy to quickly respond and see if there's something we can create with each other. If anything, just be a resource for you. I hope that you gained a ton of knowledge from us. This was fun for me. I look forward to being able to talk about other programs that might benefit you. and others that are out there.
Yeah,
So.
awesome. And I'm Fernando Rivera. I didn't say it at the beginning. I'm Fernando Rivera. I'm your GBF Realtor of Austin, Texas.
Yeah.
I try to say that. And I do this because friends don't let friends shop alone. Clearly, you have a team working for you when you have a good realtor on your side. Tune in, like, subscribe, share the video if you have friends who are curious about just the starting process of getting a mortgage loan. And we'll get some more videos out to you. Thank you so much.
Thank you.
Good.
Nice.
I want to make sure the camera's still rolling because...
Yes.
Yeah, we're still good. Okay.